Somebody said, where should I start?
2 Tech, 2 Index, VOO, VTI, Microsoft, and Apple hold for 5 years. If it don't work, I give you 25 grand. We're not going to ask these questions anymore. Respectfully. But if it don't work, and I hope it don't work, so I can give you 25 grand. But VOO, VTI, Microsoft, Apple.
I'm not playing this game with y'all. We're not doing this in 26. We're going to leave this in 25.
This is just for entertainment purposes only. I'm in a really good space. Yo, bring pineapple juice back. All right, I'll act mad. It's hard to be upset when you see your enemies like end up in ruin. It's like I don't even have that vitriol no more. I just want peace and love. But if you don't love me, I love you still. But it'd be funny when them bankruptcy filings pile up. I'm like that. You should let me help you, my brother. Allegedly.
Somebody said, is it better to max out a Roth now or put it in an option call, stock, or index fund?
Troy, what you think?
You know what? I have an opinion on it.
Yep.
But there's a guy who actually practiced for 13 to 14 years on giving financial advice.
Mm-hmm.
So I'm
we doing a 3-man weave. I'll see.
Yeah. Because it's about risk tolerance, right? Like if you haven't opened a brokerage account, if you haven't invested in indexes or ETFs and you don't have any shares in any company, should options be your first thing? No, it shouldn't be. I don't encourage it because that tells me, and I've gotten a few texts about that recently, like, yo, what's the next option play? And I'm like, yo, do you have any shares in anything?
You have to own first.
Like, let's just own. Like that people forget that part of the strategy is like, look, yes, set your table, right? And based on what you have in terms of your indexes and your ETFs, look inside there, right? Get ownership in those companies, right? So if you own SMH and you have NVIDIA, there's a stack there, right? SMH is a semiconductor ETF. NVIDIA is leading that ETF. You own that. All right, well, now let's look. If we believe in that company, we believe in the ETF that's powering it. All right, well, let's see if we can make some money on the growth of that actual company. And so that's when the option contract comes into it. And so a lot of times, I would say 95% of the times, I actually own shares of the companies that I trade options in. Or I'm getting the option contract with the intent to eventually, hopefully, and I know 99% of the times you don't exercise, but I've come into some situations where it's like, all right, this is pretty ideal. I can get a discounted price here. We've already taken out our equity. We've taken out our initial investment. Let's get some shares at a discounted price. But Shadi, your advice would be what?
I mean, it's not mutually exclusive. I mean, as far as the question was, should you do a Roth or should you do options or should you do stocks or should you do index funds? But with the Roth, I mean, you can do index funds, stocks. Theoretically, you could even trade options. But
you can trade options and futures, but I wouldn't recommend it.
Yeah, I wouldn't recommend it. But the Roth is the actual vehicle. So inside of that vehicle, you got to pick what you want to invest in. So you can definitely invest in an index fund, ETF, or stocks inside of your Roth. So you can actually do both. And the whole benefit with the Roth is that it's a retirement plan. So it's not like it's not just a regular investment. It's an investment that's tied to your retirement. But the benefit is that when you take it out, you're not going to be taxed on. It's going to be tax free when you take it out. That's the benefit of the Roth. So yeah, you definitely want to set your foundation up early. So yeah, definitely start investing before you start trading. Definitely have a retirement plan. If you do not have a retirement plan, you should open a retirement plan. For tax purposes, just also for long-term planning, diversify. It's really not even. You don't even necessarily have to diversify your portfolio, but you're diversifying your age ranges of when you actually potentially need money. Because you can invest in QQQ in a regular brokerage, you can invest in QQQ in a retirement brokerage. So there's not necessarily diversification on your investments, but it's definitely diversification on your portfolio because they're different as far as where it's actually going to be taken and the taxes. The tax structure is going to be different on it as well. So yeah, definitely start there. But a retirement is good. If you don't have a retirement plan is good. And if the number one thing for you is not to necessarily get a tax break this year, if you can go without that, then a Roth is good because it's definitely more beneficial not to pay taxes later on. But like I said, if you need a tax break, then you do it traditional. But it's good to just have money and never have to pay taxes on it again.
Yeah. Rothschild. All right.
And shout out to chat. No, we're not trading with margin. We're not doing that. We had
in your retirement portfolio? No.
No, not trading options with margin either. No, I'm not. And somebody asked about do you have multiple accounts? I do have multiple brokerage accounts. Just to simplify it inside of my E-Trade and obviously EY University, y'all seen that. So in E-Trade is where I have my options account. Fidelity, I have my indexes, and inside of my Schwab,
yep.
I have my shares. So I got A&D shares there.
Long term. Yep.
I got some Micron shares there, some Apple shares there. So the shares just sit there. And then we got the E-Trade for the options.
Yep. Same thing on the future side. Ninja Trader short term, Schwab long term swing trade account for futures, separate Schwab account for Xander and myself, because the temptation will be to trade or invest out of them all. Biggest mistake you can make. That bucket has to be allocated for that one thing. So
Schwab for the great grandchildren. There you go.
There I go.
There you go.
45-year-old woman, 401k recommendations with Fidelity. Is an on-age target plan. I feel poor, but not missing out. Been investing in my 401k for 20 years, all employers. I guess they're asking what to invest in, but you said target date plan. That's the easy route. So I think you already know the answer. You just got to do it.
Mm-hmm.
Nothing to it, but to do it.
And what number would it take for you not to feel poor?
Good question.
Yeah. Send me a DM on Instagram. I'll put you in Stock Club. And bless you. Nobody else, just that person.
Somebody said, thanks for the picks. I'm up 156% on Micron and 184% on Palantir. I own 14 stocks, 3 ETFs. Should I take profit and add to the ETFs or keep buying individual stocks?
It depends on which individual stocks you have.
Well, Palantir, he said Palantir and Micron for sure, but I guess he's looking at it like if he made that much money on Palantir,
to
Micron.
Go to safety, to form it into the ETFs would be a smart move because you'll have less drawdown. Then that's the other part too. Like as you accumulate more money, you want to put it into safer buckets or safer assets. So
slower
scenarios, ETF should go down 15 to 20%. Worst case. So yeah, park your money there if you've made a significant amount of money.
Palantir is interesting too. When you look at the drawdowns that have happened over definitely in November and December, Palantir is, another one of these ones that's just kind of, we can talk about how the valuation looks on it and it's overpriced, but it hasn't really just fallen off a cliff. It's kind of just been like settling. But yeah, you want to get safer. Riskier assets, you've made money off of them, put them into safer ones.
Yeah, I think Microsoft, Palantir, I feel they're just hovering where they should be. I think we had like price discovery, tremendous upside, and then I think we're settling in back into a normal range. And for those of you who may have started investing this year, these gains were not normal. These were not normal. This was not a normal year by any stretch of the imagination. Tesla, Palantir, Microsoft, even Netflix before they did the 10-1 split. It's like a tremendous year. Lilly, tremendous year.
What company performed best for you this year?
You said what?
What company performed best for you?
Based on return or based on dollar return?
Just return. Dollar, everybody's
Lilly, because I knew Lilly was gone.
Lilly?
Yeah, Lilly, like
what's yours?
Probably my Micron. But somebody said they're up 500% on Palantir, calls $70 strike price. Should they exercise?
All right, so this is tricky because I don't know how much money you got in there. I don't know if you took out your original investment. Here's what I've done. I like to see the equity go up by over $100. So in this example, if you have a $70 call and it's trading at 170, you're up to $100. That's a good sign. Then I start to look at the fundamentals of the company. Could this company actually get back down to 70? In a company like Palantir, which has been I mean, it's well documented how overvalued it is. Could it, in a pullback, in a correction, could it get back there? It could. It could. How much you're in profit will determine it if you do it. But also, I think what people need to realize, in order to exercise, you have to have capital. So, in order,
explain the whole thing because they don't know. They might not know. Exactly.
yeah. So he's talking about exercising the option. So an option contract, right? It gives you the ability, right, the right, but not the obligation to own 100 shares of an equity at a strike price. So this person's talking about the strike price of $70, right? So we're well past that mark. You're at, I don't know, Ian, what's Palantir trading at?
Let me look real quick. 193.
193. So you're $120 above the strike, which, I mean, you're up 500%, which is great. So you could have the equity from selling that call, or you could have 100 shares at $70. So in order to do that, you would need 100 shares times 70. That would be like $7,000 to buy 100 shares. Once you buy those shares, right, you got it at that $70 value. They already have baked in $120 each share. So $120 for each. So you're at like $12,000. Now you're going to like, oh, wait, I paid $7 to make 12. Yeah, but I mean, you're going to have that for a long-term position now, right? If it's a company that you believe in long-term will be here, then you do it. Some people, most people, I said like 90 to 99% of the time, people say, I just want to sell my contracts and take the profit. Sometimes, in the case like I've had where NVIDIA was up $1,000, I'm like, all right, well, is NVIDIA ever going to get back down to $19 or $20? Probably not. And if it did, the entire world's in trouble.
Yeah,
right?
for real.
If I can own 1,000 shares at this number, you do it because you've taken out your initial investment. It's past 100%. All right, perfect. Then what's your next metric? Is it if it passes 300%? Is it 400%? And then you slowly say, all right, well, I'm going to save these two just in case this is something that I wanted to keep in my long-term portfolio. I actually did that on Friday with Broadcom. I had the 150 call. Broadcom got up to, I think it was like 360. At its peak was at 412, got down to 350. I'm still over $100 in the difference. It's like $200. I'm like, all right, same thing. Do I want this in a long-term portfolio? Is this at a point where I can see it ever getting back to? Can we take advantage of this now? Is this going to be one that's going to be leading in the future in the AI space? Absolutely. Add it to the portfolio.
And just for my investors and traders, you have to know what percentages you're going to hit in advance. You can use ChatGPT, Claude, Perplexity, any finance app to give you an estimate for where it should be going. But you have to know before you get into the game if you get 515% when you're going to exit. You have to, because if not, you're going to be up 300% and either short side yourself out of another 100% return or stay in too long and you see a drawback. You have to have a predetermined target in your long-term and short-term trading and investing journey.
And you have to have a belief in what you're doing. That's why I say it's important. And I told this story of, Micron wasn't something that was like, oh, this is definitely going to be a short thing, or why do you believe in it? Number one, I did the research, but number two, when we went to GTC, the first thing I did was look up and like, who's here? What companies are represented here? Because there's a reason they're here. They're either partnering with them or they're part of the plan to help them scale their business. Micron, we saw, I was like, all right, bet this is a confirmation. The option call that I had, the contract that I had was down 50%, 56%. I have it documented, right? No one cheered at that point. Everyone was skeptical, like, oh my gosh, I can't believe this. What do we do? What do we do? I said, we're going to sit tight. We believe in this company. We understand the story. That same contract ended up being up 590%.
Yeah.
Right. But, sometimes that's just how it goes. But having conviction in what you believe in and the research that you've done and understanding the entire ecosystem, that happens. But if I didn't believe in it, then it would have been easy. I'm selling this. I'm down 50% of my money. I'm out of here.
Front load to work. And I agree, Troy. And Rashad, I know you said 3, Troy said all day, but like, let's be real. If you want to get rich in America now in this window that we have, stop bullshitting on social media, trying to catch a vibe, being outside. Y'all hate it when I said that don't go outside for a number of years. Oh, no one wants to do that. Well, be broke.
Those are your options. That's the option.
And it's the crazy part. You'll catch the vibe from doing the work and being great at the work. You're chasing the wrong goal, yo. You want to be lit and be seen and all this other. Double down on the work. And those who have not done it, they will tell you quietly they regret not doubling down on the work. The work becomes the fun and hanging out with your friends and your family, and that you have to have purpose.
Yeah.
The purpose can't be to put other family names on your chest like a brand whore. The goal has to be freedom for your family. But do what you want. I'll tell you, been on the side of freedom. Oh my God, so much fun. So much fun.
You stressed the WH and whore just now.
Do what you want, though. Then we turn around and tell you about them blackout. They won't even give us a true equity partnership in none of them houses. We could be friends of the brand or quiet aligners on social media. But all right. But if we took over a company and we owned the majority shares as a community, we can then say something. But people don't want to own to that level. You just want enough to, and that's fine. But we have to elevate past this. We really do.
2026 is upon us.
Somebody says start a stock learning group with InvestFest attendees. We've been locked in dissecting Ian's slides ever since. Any other topics you guys suggest we study to become stronger investors?
Every episode of Market Mondays. Classic work. We drop the album every week for 5 years.
Yeah, we're going on 6 now.
Mm-hmm.